Welcome to This Week in Finance, covering the week of June 29 through July 6th. Let's begin with the global picture. The U.S. 90-day tariff pause officially expired this week. While the U.S. secured a deal with Vietnam, there's still uncertainty around negotiations with India, Japan, and the EU. This is making markets a bit nervous, especially ahead of the July 9th deadline. At the same time, some wealth managers are beginning to rotate out of U.S. equities due to rising fiscal and policy risk. On the geopolitical side, Israeli airstrikes on Iran sent oil prices sharply higher, reminding investors that Middle East tensions can escalate fast. On the domestic front, markets had a strong week. The S&P 500 and Nasdaq both hit fresh highs, and the Dow climbed over 2%. A major tailwind came from the June jobs report, which showed the economy added 147,000 new jobs, well above expectations. Unemployment also edged slightly lower to 4.1%. That combination of job growth and slowing inflation continues to fuel optimism, especially in tech and consumer sectors.
This rally is being fueled heavily by retail investors, who poured around $155 billion into U.S. stocks and ETFs over recent weeks. A lot of that capital has gone into tech, semiconductors, and index tracking funds. Meanwhile, institutional investors are still cautious. Many are rotating into gold or increasing exposure to non-U.S. markets as they wait to see how tariffs and fiscal policy play out.
Looking ahead, there are a few big risks on the horizon. First, the July 9 tariff deadline looms large. Any breakdown in talks could rattle markets. Then there's the Senate vote on a massive $3.4 trillion tax and spend package that could raise fiscal concerns. Add to that the upcoming Q2 earnings season and, of course, ongoing geopolitical tensions, and it's clear that July could bring renewed volatility. So while momentum is strong, this is a market that needs to stay nimble.
These stocks saw the largest percentage increases in the S&P 500 last week. Leading the pack was Cadence Design Systems, up over 5%. Investors are staying bullish on AI and semiconductor design tools, and Cadence is right at the heart of that ecosystem. Close behind, Synopsys also gained nearly 5%, continuing the momentum in chip design software. Tapestry, the parent company of Coach and Kate Spade, surprised with a 4% climb, possibly fueled by improving retail sentiment or optimism around its Capri Holdings acquisition. Ansys, another software company tied to engineering and simulation, also joined the rally with a strong week. And finally, Enphase Energy posted a solid gain, bouncing back as clean energy stocks showed some renewed strength. So overall, it was a tech-heavy leaderboard, with AI, chips, and clean energy driving the upside.
And to conclude this week's recap, let's turn to the laggards in the S&P 500 from last week. At the bottom was Lennar, falling about 4.5%. Home builders continue to slide as rising mortgage rates and soft housing demand weighed on sentiment. Bunge, an agribusiness giant, dropped roughly 3.6%, possibly pressured by weak crop pricing or global trade uncertainty. D.R. Horton, another top builder, declined nearly 2.7%, reinforcing the same themes in housing. Campbell's Soup slipped around 2.2%, a reminder that consumer staples aren't immune to broad market pressures. Finally, NVR, a high-end home builder, was down about 1.9%, capping a tough week for the residential real estate sector. In summary, builders dominated the list of decliners, highlighting that housing headwinds remained front and center.
Thank you for watching This Week in Finance. Stay tuned for next week's episode next Sunday, and have a great week.